Okay, let's start off with the next presentation here. My name is Simon Granat, and I am an equity analyst at ABG, covering IT and tech stock. And with us today, we have the pleasure of welcoming Per Holmberg, who is the CEO of JLT Mobile Computers. And with that said, please go ahead, Per, and present the company.
Okay, thank you, Simon. Let's see, yes, my name is Per Holmberg, and I'm the CEO at JLT Mobile Computers, and I've been here for a little bit more than 10 years now. And in my presentation, I wanted to give a brief introduction to JLT, what we do and what our mission in the market is. I will also talk about JLT being a growth company and cover kind of the strategies that we have to continue the growth of the company. And then I will finish with a little bit talk about the situation right now, the corona pandemic, and how we are managing through this as well. So JLT, I would describe JLT as a tech company. We've been in business for 25 years now. And we really have experience from developing our own products, our own rugged computers, and working with customers to deploying those in real situations. We have our own development team located in the headquarters in Växjö, Småland. And we have also chosen to do the manufacturing in Sweden. So we have that in Ronneby, about an hour car drive from Växjö. We are currently on the 6th generation of products, and since start we developed and delivered more than 100,000 computers around the world, basically. It is with our experience, long-term experience, and our knowledge about the products that we meet the customers. And today we do more than just delivering the computer. We really put everything together, including the hardware, software, as well as services to really help the customer to address their problems and challenges. So our mission is to empower customers' operation by enabling hassle-free IT in very tough environments. And what is driving the need then for hassle-free IT? Well, it's coming from different types of macro trends, basically. Perhaps the biggest demand driving the need right now is the move from selling products over shops and through big central warehouses to a more distributed model and supporting online sales and Ethernet marketing and sales. But we also have environmental requirements that puts a lot of legal requirements on our customers to track goods, especially within food and beverage, basically from it's taken out of the ground to it's placed on the shelf in a shop or store. Challenging environments, well, that's really our focus. And what are some of those environments? Well, the biggest environment for us and the biggest market for us is really warehousing, where the computers are mounted on forklifts or different type of trolleys in a warehouse. And a warehouse can be challenging in many different ways. It could be very clean, it could be very dry, an even temperature around 20-25 degrees. But even in that environment, it is a tough environment. Typically, these forklifts are running across a concrete floor. There may be big tracks in the floor, etc. So there is vibrations, there is shock. And another big component of that is also to always have access to the computer via the Wi-Fi, for example. And setting up a Wi-Fi and a reliable connection to the network in a warehouse that changes from day to day. One day it could be filled with goods that absorbs the radio waves, and the next day it could be all empty. So it is a challenging environment in many different ways. And then, of course, you have warehouses where we store or customers store the goods in freezer temperature, for example, or it could be outdoors and indoors, it could be wet and it could be cold and rainy. So very different environments, really, warehousing, but that's the biggest segment for us. I would say about 60% of the computers and the revenue is coming from that type of environment. To that, we also have a couple of verticals that we are focusing on a lot. One is the ports, where the computers are mounted in the big cranes, for example, that offload ships coming into the port onto the port itself. And then the goods and the containers will be transported the way via trucks or train, for example. Mines and mining is another area for us where the computers are mounted in the mining equipment itself. And agriculture, which is kind of a growing segment for us. Again, it's used in different types of equipment used on the farm or out in the field. JLT really has a global reach. Roughly half of the revenue we do is in Europe, and the second half is in the Americas. And we reach the customer by our own offices. We have a headquarters in Växjö, Sweden, as I mentioned. We have a small sales office here in Stockholm. We have a fully owned subsidiary in the US, where the US operation is headquartered in Chandler in Arizona. And then we have the production in Ronneby for the European market and for the US market. But we also do some local production in the US in a facility in Atlanta. And then in addition to that, we work through a reseller network where we have partners representing JLT and our solutions around the whole world, basically. If you look at the revenue from 2019, about 45% came from the Americas, about 25% from EMEA, which is Europe, Middle East and Africa, about 20% from the Nordic region, and then we have one segment called OEM, where we sell our products into customers, then build their own solution on our products and sell that as under their own brand, basically. So they are not the typical reseller. So you could actually split up the OEM business into the different geographical regions as well. So about half Americas and half is in EMEA. What is it that makes JLT unique on the market then? Well, we do have really good products. I would say that we have the best products, and we are recognized in the industry for delivering the best quality, the best performance on the products we do. That's one thing. The other thing is that we develop our products ourselves. We don't just buy the electronics from Asia and put a hard shell around it. We actually develop the electronics, we develop the mechanics, and we put everything together within our own development team. So we have, over these 25 years, really built up a good expertise around how these products work in the field and what we can do to make them as reliable as possible. And we use that through what we call a high-touch customer-facing model. That means that we typically go out to the customer to really understand customers' operation and their environment. And by being there, we can address the customers with our products and our solutions. And we have a lot of flexibility through the fact that we own development and we own the production, so that we can adapt our solution to customer-specific needs. Our goal is to grow faster than the market. And we have been doing that if we look over the past 6 years. On average, we've been growing 17% annually. It's not an even line, as you can see on this chart. Some years have been stronger than others, but overall, we are growing if you're looking at this on a long term. In the environment where we are, we expect, or we see that the market that we are in have been growing about 5% a year. So we have definitely been outpacing the market. Today, we command a 10% market share, and that makes JLT, on a global basis, the 4th largest supplier in the market. And in the US, we are actually the 3rd largest supplier. We are on a growth path, and 2019 we reported a record level of revenue, and we did that with good profit as well. So the gross profit was also a record revenue, 65 million. Was also a record, and the operating result was 14 million. So how do we maintain and accelerate this growth moving forward? Well, we have a growth strategy in place, which we've been executing on for the last couple of years, and that we will continue on. And it really consists of 3 different components. The first one, which is really where JLT started in 1994, that is our own product development. And we're going to talk a little bit about what we mean by that. Around 2010, we really moved from just being a supplier to OEM customers to actually marketing and selling our own brand. And with that, we started to build our sales channel, both in Europe and in the US. And more recently, 2018, around there, we also saw that there is a lot of opportunity for JLT to sell more than just our own products. We are selling other types of products, accessories, and also services. And we're really trying now to build up the service part of the solution that we have. So let's take a look at these 3 legs of the strategy. So when it comes to product development, we have historically been very focused and very niche in the terms of products. So we've been developing vehicle mount computers that lasts forever, basically, that is mounted in different types of vehicles. And we do that with different levels of performance, different sizes, and different form factors. But in addition to that, our customers are also asking for hand-carried units and other types of computers that are used in different parts of their operation. And because we've been so successful with the vehicle mount computers, and customers are happy, they are asking us if we can provide also the other types of products. So we are today having a mix where we continue to focus on the products and the part of the products that adds the most value to the customers and makes JLT unique. And everything that is more commodity and that already exists in a good form on the market, we source that to complement our product offering. So on this picture, you see a couple of examples where the 2 right-hand computers here are the vehicle mount computers developed by JLT, and here are 2 hand-carried computers that we haven't developed, but we have taken in-house, we have made the qualification, and we support them at the same level as with our own products. Sales channel. There are really 2 objectives with developing the sales channel for JLT. One, of course, is to increase the sales. And then, in particular, I like to increase the broader basis of the customer base and the sales. We call that the running business. The running business consists of many orders, medium-sized orders, that together adds up the total revenue for JLT. And that is represented in this graph by the orange bars. And that has been growing over the last number of years consistently. The running business is really the part of the business that we can add on to from year to year. And we can add that sales by improving the channel and having more partners and more feet on the ground, basically selling JLT. On top of that, we also have specific, discrete, so to say, big deals or big orders. And of course, we like to have those orders as well. The challenge with that, though, is that it's not an even flow of that type of business. They come in, and if you look at 2016, for example, we had a number of those big deals closing in the same year, while in 2017, we didn't have as much. So that's really putting on top of the running business that determines the total revenue of JLT. And that's why you don't see this even line from year to year. It jumps a little bit from quarter to quarter and even from year to year. But the underlying business, which is really the momentum that we have, is growing consistently. The other part, of course, with building the channel is that we need to strengthen our local presence on the different markets, and we need to get closer to the end customers. Because we realize and we know that in order to develop the products and develop the total offering with services included, we need to sit next to the customer and have those discussions. So it's a combination of selling through a partner network and having access to the end customer as well. And then I mentioned JLT services. This is a very important part of growing the business for JLT. Today, most of the services we are selling are contracts on the equipment that we sell. So we sell a service agreement, could be 3 years or 5 years or even 7 years with equipment. We call it a no questions asked service agreement. So different from a typical warranty, we actually service everything related to the product, even though it could be made by the operator himself or herself. And we do that with a guaranteed level of 3 days in the factory, and then the equipment is out again. It's very popular. Many customers and more customers are buying the equipment with this service agreement attached to it. But we're also expanding in other parts of the services. We do some consultative services. We do customer adaptations of the products and the solutions. We do kitting in our factory to make it ready for the customer to install when it arrives the customer site, for example. The service-related income in 2019 was 13 million, and that is up 21% from 2018. So the services component is growing faster than the total revenue for JLT. That also creates an interesting thing in the balance sheet. Don't know if you've noticed, but the customers typically, when they buy a new computer, they buy the service agreement and pays for the service agreement up front. But the way we put that in our books is that we amortize that revenue over the period of the service agreement itself. So we don't recognize the whole service sales in the first year as revenues. It's spread out over the 3 years or 5 years or 7 years of the agreement. So that means that we have, over these years now, built up an amount of prepaid service agreements in our balance sheet. And 2019, that was 18 million. So that means, theoretically, if we don't sell anything more next year or the next coming 3 years, we at least have 18 million that will come in as revenues over these years. And that grew from 14 million the year before. So right now we are still, I would say, in the middle of a corona pandemic. It's not over yet, and I think that it's still very hard to predict what the impact is on the global economy and how that will impact JLT moving forward. But this is how we manage through this, for now at least. So my priorities, of course, is to keep my staff safe and to keep my staff productive and being able to do their job. And when I did this slide, more than half was working from home. Today, a few more have come into the office. But the tasks that most people at JLT do lends themselves to be done anywhere, basically. So it's no big problem for most of the employees to actually do their job from home, and we have a very flexible policy of doing that. We are a very distributed organization already, so we are used to working through video meetings and other ways. The second part there is to create stability. We already in Q1 had a few measures that we put in place to reduce the cost. And to secure delivery capacity. I'll talk a little bit about that. But also to keep the most important strategies and the most important projects for JLT in place and continue that so that we are strong when the pandemic turns and the economy is picking up again. So we are definitely ready to accelerate when we see the signs in the market that allows us to do that. The good thing is for us is that we are financially prepared. We have a very strong balance sheet and we have a net liquid position in Q1 at 50 million, and I believe it was around the same in Q2 as well. That is, as a comparison, about the total expense in 2019. So we have a stable position financially, and that allows us to be ready and invest where we see opportunities, even though we are in a downturn, and to keep the most important strategic long-term projects alive in the company. We have secure delivery capacity. Of course, it could be that our suppliers are having issues and will not be able to deliver. We are buying components from China, for example, and other places on Earth. We took a decision to increase our stock levels to create a little buffer, both of components and ready products. And we have backup processes in case people are sick in the factory or things like that would happen. And the good news is that today we haven't failed on any commitments to our customers because of delivery issues. So we're doing fine there. Cost reductions for Q1, we started in Q1 to implement a few measures. We discontinued projects that we felt is not so strategic right now, so we can put them on ice and push them into the future. We pulled back on marketing and sales to some extent. We were reducing the working hours on the whole staff. The executive team agreed to reduce our salaries with 10%. And we actually had accelerated in Q1 and made some investments specifically in the marketing and sales. And when the pandemic hit us, we decided to, okay, let's postpone that. So we pulled back the additional cost basically that we took on in Q1 back to where we were in 2019. And that's what you see in the result here as well. And you probably already have heard that as a precautionary measurement, the board also decided to withdraw the 2019 dividends. So how are we doing then? Well, this is now the second quarter that we reported a couple of weeks ago. The first numbers is actually for the first half of the year. So order intake, 58 million. It's lower than what we had 2019, but it's actually higher, I must say, than my expectations or my fears, basically. So we are actually doing a little better than what we had planned for, which is a good thing here. Revenues, 56.9 million. The operating profit, 0.9 million. We made a loss in Q1, you may have seen, but we made a profit in Q2. So now we are on the positive side, which is definitely our goal throughout the pandemic here. So a few comments on the second quarter per se. The corona measures we put in place, the cost reductions we did is playing out exactly the way we wanted. And it's actually going even a little better perhaps than we thought. Order intake was 29 million for the quarter, which is in parity with previous quarter. So we haven't seen a further decline in the market. Revenue 30 million, operating profit 1.8, which again was enough to compensate for the loss we did in Q1. We will keep the programs, the cut-downs that we have done until we see further signs that this will turn around. But the future-oriented projects are still in place. We are still developing product portfolio and other things. And I feel that we are definitely ready and we have what's needed in place to accelerate when we see the signs that we can do so. So key takeaways, 2019 was a record year for JLT. We're managing through the corona crisis in the second quarter. It's still hard to predict, so we have some cautions still in place. But we are in a strong position. We are financially prepared. We have taken measures to create the stability we need throughout the crisis, and we are definitely ready to accelerate when it turns. Thank you. That's all from me.
Thank you, Per. And as you know, we are running a bit of a tight schedule, but I believe we have time for some questions, at least one or two.
Yes.
And I believe that one of the most exciting part of your business and your strategy going forward is to increase the services sales. Can you tell us, try to educate us a little bit, what does this mean for your business? What is the rationale behind this move? And what could this mean for your financials in the long run?
Yeah. So there are a couple of reasons why services is important to us. One is first of all, we definitely see the opportunity. So when we are out with meeting customers, we realize that just selecting the right hardware is not enough to really get the operation reliable and to get the efficientness that the customers are looking for. So there is a lot of opportunities to sell services around that. That's one thing. The second part is that services to us create some stability. So when we sell a service contract, we really have a contract with the customer for the period of that contract. That could be 3 years, could be 5 years. So it creates stability to our business, and that it has been a little bit of a challenge before when we didn't have as much services, where you get a big installation with a customer one quarter and then you don't have that next quarter, so you get more lumpy type of business. So that's important to me. And then the third thing is that we actually make good profit on services. The products we develop has very good quality and they are very reliable. That means that we don't have that much cost related to the services that we have. So even though it's what is it, around 10% of the revenues today, it actually have a bigger impact on the result. So that's the third reason why we do this. Yeah.
And as a second question, I believe that's all we have for today. Could you mention anything, what is like the customer activity post the summer, and also how you would assume it to be prior to the summer?
Yeah.
Just some comments about what are the customers doing right now.
So I would say it's still very difficult to predict what it becomes in Q3 and Q4 for JLT, but we have seen some good signs at least. This summer, which usually gets pretty quiet, at least in Europe, has been fairly active. And I don't know if it's because customers have chosen not to take the vacation in August like most of our European customers are doing, because they have a lot of catch up to do. But there has been quite a bit of activity for us even during the summer. Now, this is not orders that will turn into orders or business today or maybe next week or next month, but at least we see the customers are still active. And that's very different from March, April, May, where a lot of customers were more or less paralyzed and things were just put on hold and we couldn't get hold of people and so on. So I think we have found kind of a new normal, so to say, where we actually have the dialogue again with the customers and things are moving forward. So that's a good sign, I think.
Sounds like a bright future.
Yes. Yes.
Thank you, Per, for that presentation.
Okay.
And that was all for me.
Thank you, Simon. Thank you very much.